Hi guys, welcome to my YouTube channel. Here I am back with another informative video. So the topic of discussion is LLC versus S-Corp versus C-Corp, which saves you most in taxes. So talking about these three, S-Corp versus C-Corp versus LLC, what's the difference and which one is better for your business? So here we will discuss what are the main types of the business ownerships, which is better, a C Corp, S Corp, or LLC. What is the C Corporation? What is S Corporation? What is better to create LLC instead of the C Corp and S Corp? What is LLC? And choosing the right business structure for the entrepreneurs. Business owners can structure their companies in several different ways depending on the size of the business, its growth potential, how the business is managed, how the owners want to be taxed, and many other variables. Anyone starting a business should consult a qualified tax professional such as an accountant or a tax attorney for advice on which corporate structure best fits their goals, but it helps to understand some of the factors that typically influence such decisions. Many entrepreneurs wonder what types of the business ownerships are possible and how to determine which one is right for their business. The following is a guide to the most common question prospective business owners that have about how to structure a business enterprise in the United States. So, discussing about the what are the main types of the business ownership. New companies can be set up in five different structures: partnership, limited liability company, sole proprietorship, S corporation, and C corporation. Two of the most common type of the business configuration are the C corporation, C corps, and the S corporation, S corps. There are the advantages and disadvantages to each structure, and C and S Corp are taxed differently, but there are also similarities. Both C Corp and S Corp provide limited liability protection for their owner and the shareholders, so the business owner's personal assets are protected against lawsuits, and debt collection in the is leveled at the corporation must adhere to the compliance standards that require them to adopt bylaws and issue stocks, hold regular meetings, file government reports, and pay annual fees and taxes, and are required to submit tax return filings for the business income and the profits. While each C and S corporation each have their pros and cons, and the nature and the goals of your business will determine which one is best suit you need. Which is better, a C corp or S corp or LLC? There is nothing inherently better about a C corp, S corp, and LLC. These designations simply describe how a company is taxed and which rules must obey in order to stay compliant with the Internal Revenue Services. How one should incorporate really depend on the nature, size, and goals of the business in question. In general, C Corp tend to be larger companies and S Corp tend to be smaller businesses or sole proprietorship, but that's not always the case. Indeed, there is plenty of the gray territory when it comes to deciding the most strategic tax status for growing small and the mid-sized companies, including LLC. What is a C corporation? Generally speaking, a C corp, named for its inclusion is a subchapter C of the IRS code, is an independent legal entity owned by its shareholders that has unlimited growth potential. Most large business and the public companies are formed as a C Corp because C Corp is a business structure that allows for the limited growth through the stock scales, which makes them appealing to the investors and is ideal for the large retail based business. Another distinguishing feature of the C Corps is that they are subject to double taxation. This means that the corporation itself is first taxed at the federal corporate tax rate of 21%, and any dividends or the profits that company passes on to its shareholders are taxed a second time as personal income. In fact, one of the most compelling reasons to file as an S corp is to avoid double taxation. More on later. So, what are the pros and concerns of forming a C Corp? There are many benefits to establishing a C Corp. Most of the involve tax advantages and provide mechanism for the tax growth. On the other hand, creating a C Corp can be expensive because complex nature of the C Corp usually requires consultation with tax and legal professionals to help with the state and federal filing requirements, as well as documents such as certificates of incorporation and bylaws management, and the labor cost also add to the bill. And as a company grows, so does its complexity and expense. On the pro side, S Corp can issue more than one class of stocks. Common and preferred stocks grow through the virtually unlimited stock sale, essential for companies that want to go public, attract investors seeking passive income, which helps fuel growth. Have shareholders who are not US citizens, which is great international business. On other companies, LLCs, partnerships, and trust, allowing growth through the diversification, electric to go public. A major step for expanding companies raise business capital without having to give investors voting right. The concerns of forming a C Corp include more regulations and reporting responsibilities. C Corp must file annual reports, financial disclosure, business income taxes, hold regular board meetings, and keep bylaw and voting records on the promises. Stricter management requirements, broad of the board of the directors and the management must be separate entities. Higher overall operating costs such as legal fees, payroll, insurance, regulatory compliance, it all adds up. Nevertheless, for entrepreneurs who envision a company with the growth potential and expensive investment opportunities, starting a C Corp may be the best choice. How do I start a C Corp? Starting a C Corp is not something one does lightly, for it involves some time consuming and the difficult work up front, as well as binding commitment to the company's purpose and the success. To form a C Corp, a business owner must take the following steps. Step 1 is register the organization with the distinctive name number no one else is using. Step 2, appoint corporate officer to include chief executive officer and a board of the directors. For step 3, file articles of the incorporation with the secretary of the state in the state where the company is registered. Step 4, write company bylaws. Step 5, issue stock certificates to shareholders. Step 6, obtain relevant business license. And the step 7 is submit IRS from the SS4 for an employer identification number. Each of these steps requires a great deal of thought and or follow through. For these reasons and many others, establishing a C Corp is a complicated procedure that typically involves consultation with a tax attorney, and once the enterprise is up and running, investment is in a software program to ensure that all the tax filings are accurate. Instead, many entrepreneurs may prefer the easier option of creating an S corporation. What is an S corporation? In principle, an S corp named after the subchapter S of the Internal Revenue Code. IRC is a business entity that elect to pass through taxable income losses, deductions, and credits to company shareholders. They are popular largely because organizing and as an S-Corp appeals to a small business or a sole proprietors, offering enticing tax advantages and provides liability protection for the personal property. S-Corp are considered pass-through entities, which means their taxable revenue are not taxed at the federal level. Rather, they pass through directly to the organization's owners and the shareholder personal tax returns, thus avoiding double taxation because S corps themselves do not pay federal taxes. Instead, they pay up to 13.3% state and the local income taxes plus S corp owners may pay between 10 to 39.6 percent for the federal personal income taxes on the earning or the profit. Owner of an S corp report business losses, profit deduction, and the credit on their personal tax returns, which can provide significant tax savings. Indeed, thanks to the 2017 Tax Cuts and Job Acts, S corp shareholders can deduct up to 20% of the qualified business income (QBI), which may reduce an individual's tax burden by 20 to 25%. In addition to tax savings, S corp structure protects the owner's personal property from any lawsuit or debt collections and directed at the S corp. So the next is what are the pros and concerns of forming an S corp. There are several advantages to running an S corp as well as some disadvantages. The advantages of structuring as an S corp are owner shareholder do not have to pay federal taxes on the corporation, rather they enjoy pass-through taxation on the income, thus avoiding double taxation. Self-employment taxes are lower largely because social security and the Medicare taxes are lower. Liability protection, all personal property is protected. Owner have more flexible accounting options include using QBI. Management requirements are less rigorous. Owners and the management do not have to be legally separated, and owners can be classified as employees, which can also be yield significant tax savings. Ownership interests are easier to transfer. The disadvantages of an S corp are can only have 100 shareholders. Shareholders must be U.S. citizen or the legal residents. All shareholders have voting rights. Can only issue one class of the common stock. Must operate domestically. Granted, the limitation of an S corp are may discourage potential investors and can make it more difficult to raise capital, but they can also attract investors who want more direct involvement with the business. Not all types of the business can choose to be S corp. However, financial institutions are prohibited from being S corp. For instance, as or the insurance companies and the multinational corporations compliance requirement are also stricter with an S corp than they are with the other business entities such as an LLC or the limited liability partnership. Furthermore, S corp owner can run into trouble with an IRS if they don't keep meticulous records or pay their employees a salary that the IRS deems reasonable. How do you start an S corp? Starting an S corp is easier than starting a C corp, but the process will still involve several similar steps. The basic step of the creating an S corp are: step number one, to choose a name for the business and make sure no other business entities exist that are using the same name. Step number two is file articles of the incorporation, which the state, including the corporation's name, address, purpose, primary activities, and the owner's name. Then the step number 3 is elect a board of the director including chairperson, vice chair, secretary and the treasurer. The step number 4 is right by law of the governance outlining the rights and responsibilities of the shareholders. The help of an attorney is advisable for this step as there are legal consequences involved. Step number 5, obtain an employer identification number, which is your tax ID to pay federal taxes, hire employees and apply for the licenses and the permits. So once the S-Corp is formed, the real work begins in terms of the building the business and meeting quarterly and annual reporting obligations. Regular board and shareholders meeting must be held, minutes recorded, decision noted, and the business record kept accurately and up to date. Sole proprietors must also adhere to the rules even if they are S-Corp's only board member and the employee. When it is better to create an LLC instead of a C-Corp or an S-Corp. As the business structure goes, C or S-Corp may seem overly complex, especially for the small business owners or the sole proprietors. If you have a small business, you may wish to remain as a sole proprietor who make all their own business decision and keep all the profit. If you are a freelancer or a contractor, however, neglecting to organize under some or type of the business structure could put your personal assets at risk. If say a client decides to sue you, on the other hand, if you wish to protect your personal assets but don't want to form a C or S corporation, another option is form limited liability company, which is the most common organizing structure for a small business. What is an LLC? An LLC is a business structure that protects business owners' personal assets from the business obligation or the liabilities. Limited liability companies can range in size from the sole proprietors to business with the hundreds of the employees. For example, many law firms are the LLCs and solo contractors or the freelancers elected to form an LLC to shield may elect to form an LLC to shield personal assets from the lawsuits or the debt collection directed at the business. What are the pros and the cons of the forming a limited liability company? Beyond protecting a business owners' personal assets, there are other reasons to create an LLC, mainly because they are easier to establish. The advantages of forming LLC are not required to have a board of directors. LLC are allowed to have as many owners referred to as members as they desire. Members are not required to be US citizen or residents. LLC owners can make their own business decisions, whereas corporation or have boards of the directors and shareholders who participate in the decisions. LLC owners can also hire the managers or choose to appoint officers who make business decisions for the LLC. LLC owners and does not require detailed record keeping, but it's still important to keep accurate books and the accounts. The disadvantages of forming an LLC: LLC owners pay taxes on all the net profit from their business just as a sole proprietor do, and self-employment taxes are higher than the employer taxes. LLCs are regulated by state laws and each state has different rules and the fee structure related to setting up and maintaining a limited liability company. Then comes the LLCs cannot issue stocks and cannot have shareholders, which may limit options for the attracting members to an LLC. So how do you start your LLC? LLC is regulated at individual state level, so you will want to familiarize yourself with your state LLC rule first. However, these are the general steps for the common to the most states. Here we discussed that how LLC, S-Corp and C-Corp differ from each other and which one saves you the most in taxes. Hope this will have been beneficial for you. So do subscribe the channel for more videos.